Hey traders! In this video, we will be discussing about order block. Order block is a vital part of trading, widely used by smart money concept traders. In this video, you will understand everything about order block and some things about smart money concept. Before we go into the video, I would like to tell you what smart money concept is. The smart money concept is a financial approach that helps traders and investors understand market dynamics and make informed decisions. It refers to the capital that is being controlled by institutional investors, market mavens, central banks, funds, and other financial professionals. Smart money is invested on a much larger scale than retail investments and is often led by the actions of central banks. But remember that we are not going to discuss more on smart money concept. Rather, we will much focus on order block. And also, before we go into the video, please like, subscribe, and turn on the notifications bell to get notified when we upload a new video. Without any further delays, let's delve right into the video. An order block is a specific price area where large market participants, such as institutional traders, have previously placed significant buy or sell orders. These areas are characterized by clusters of orders that can have an impact on price movement, liquidity, and market sentiment. The concept of order blocks is a certain type of approach for identifying key levels of support and resistance based on the behavior of institutional traders. These key levels are then used as an entry or exit point for trades. To mark out this order block in our chart is really confusing. This is when we add an indicator that will help us mark this out. And to add this indicator, we navigate to the indicator search bar. There we are going to search for Fluid Trade. Select the Fluid Trade SMC light created by Pingjiv. It is designed to help traders identify supply and demand zones by using pivot points to show recent highs and lows. The tool also includes features relevant to SMC, such as full internal and swing market structure labeling in real time, swing structure labels, and solid lines on the chart, supply and demand, bullish and bearish, swing points, and oppressions to style the indicator to more easily display these concepts. Before we discuss on how we are going to use this indicator, let's set it for it to be more accurate. And to do that, we navigate to the indicator setting on the input setting. You can see all the indicator setting. What we are going to do is that we are going to change the supply and demand width from 2.5 to 10. And if you don't know how to identify trend, you can check the zigzag. This allows you to identify the trend of the market by marking out the higher high or lower low of the market, depending on the current trend of the market. But checking this will make our chart look messy, so we are going to leave at default. However, how we are going to use this indicator is that when the indicator marks out the order block, we are going to wait to see price coming back to retest the order block before we can take a trade. For instance, here you can see that the indicator has given us a bullish order block. Then we wait to see price coming back to retest the order block level and give us a reversal pattern before we can take a trade. And looking here, you will see that the price has given us a morning star pattern, which is a very good reversal pattern. Then we can enter a trade setting our stop loss below the order block zone and targeting the supply level, or you can be conservative, targeting 2 risk-reward ratio. I know you might be wondering, why did I call this zone order block? And the indicator named it supply or demand zone. This is because a demand or supply zone can actually be an order block. And one thing you really need to understand is that there are many ways to mark out order block. You can mark it from the body of the candle, or you can mark from the wick of the candle, as the indicator has already did for us. Understanding on how this works, let's see how we can identify a high probability trade using this indicator. And in other to identify a high probability trade using this indicator. This when the break of structure, BOS, comes in. And you should also bear in mind that BOS are of 2 types, which are the bullish and bearish BOS. The bullish BOS is the BOS marked when price is on uptrend. This BOS has been marked on top of the price. And the bearish BOS is the BOS marked when price is on downtrend. This BOS has been marked under the price. This shows that price is on a downtrend. How we are going to use this BOS is that when we see that the indicator has marked a bullish BOS indicating uptrend, we are going to wait to see price coming back to retest the order block before we can take a trade. This is opposite when the indicator marked bearish BOS, and this will help us add more confluence to our trades. Understanding everything on how we are going to use this indicator, let's see example on how to enter a trade using it. First, let's see how to enter a trade using only order block. To enter a buy trade, make sure that all these three conditions are made. First, make sure that price is on uptrend, and the indicator has marked out a bullish order block. Second, you need to see price coming back to retest. This retest can be wick of the candle or body of the candle. Third, you need to see a very good reversal pattern to enter a trade. And looking here, you will see that all the condition has been made. Then we can enter a trade, setting our stop loss below the order block zone and targeting 2 risk-reward ratio. As you can see the trade play out neatly. Let's see how to enter a sell trade. First, make sure that price is on downtrend and the indicator has marked out a bearish order block. Second, you see that price has come back to retest the order block. Third, you need to see a very good reversal pattern to enter a trade. Seeing that all this condition has been made, then we can enter a trade, setting our stop loss above the order block zone and targeting 2 risk-reward ratio. As you can see the trade play out neatly. Now let's see how to enter a trade, combining break of structure and order block. To enter a buy trade, make sure all these three conditions are made. First, you need to see that the indicator has printed a bullish break of structure and a bullish order block. Second, you need to see price coming back to retest the order block. This retest can be wick of the candle or body of the candle. Third, you need to see a very good reversal pattern to enter a trade. And looking here, you will see that all the condition has been made. Then we can enter a trade, setting our stop loss below the order block zone and targeting 2 risk-reward ratio. As you can see the trade play out nicely. Let's see how to enter a sell trade. First, you need to see that the indicator has printed a bearish break of structure and a bearish order block. Second, you need to see price coming back to retest the order block. Third, you see that price has given us a very good reversal pattern to enter a trade. Seeing that all this condition has been made, then we can enter a trade, setting our stop loss above the order block zone and targeting 2 risk-reward ratio. As you can see the trade play out neatly. Like this, you have made it to the end of this video. I would like to tell you that when you see that price has come back to retest the order block, you need to look for engulfing candle as your reversal pattern. And if you have any question, feel free to ask it on the comment section. We will attend to it. Also remember to like, subscribe, and turn on the notification bell to get notified when we upload a new video. Thanks for watching. See you on our next video.